Hi, you're watching News 9 Live. I'm Karthik Malhotra. What an action-packed Monday we saw after, of course, the 1-hour Muhurt trading that happened on the day of Diwali, 12th of November. But it seems that Monday, markets pretty much wiped out all the gains that we saw on the Muhurt trading. What have we got? Let's look at the data on the markets, the closing bell as markets closed on Monday. Let's look at the data coming in. Markets closed down, like I said, all the gains that we had seen for the 1 hour of Muhurt trading pretty much seem to have been erased. Sensex down about 0.42% or so, below the 19,500 mark. Sensex down about half a percentage point, again well below the 65,000 threshold. We've seen a little bit of recovery in the mid-cap 100. It started the day in the red, has gained, eased up in the green about a little less than just about a 0.1 percentage point or so. Nifty small cap started the day flat, ended about 0.68 at about 13,000 levels. Well, we've got somebody very special to make sense of all the movements of market today. But remember, before we go to our special guest today, two big headlines that again emerged on Monday. One, of course, was the listing of what was earlier referred to as NSDL. Protean IPO. Finally, the e-governance, Protean e-governance IPO resulted in listing. All the action from that IPO of Protean on the show today, but also on the show, a very special analysis. And this analysis in the context of the MamaEarth listing, high aspirations, high call for action to invest in the IPO, and at one point seen as a potential challenger to HUL. But have those dreams pretty much not stood the test of water? And in context of MamaEarth and Honasa, the parent company, have the blockbuster startup unicorn IPOs really delivered value to the shareholder? All this and more with a very special guest joining us on the broadcast, Avinash Gorakshakar, Director, Research, Profitmart Securities. Avinash, hi. Thank you so much for joining us on this special edition. To begin with, a fantastic 1 hour trading we saw on Diwali evening, but come Monday, starting with the first take, going all the way through the trading day, all the gains that were made on Muhurt trading seem to have wiped off. What really happened on Monday?
Yeah, I think good afternoon, Karthik. I think clearly, yesterday's Muhurt session was largely a sentiment-driven session. But if you talk about today's morning session, I think markets were clearly, they started off on a negative note, and I think this negative sell-off continued throughout the day. The Nifty also was not able to maintain levels above 19,500, and the Sensex, as you rightly mentioned, also was down by almost 0.5%. Now, the key reasons for this is obviously the fact that now the markets are clearly looking at the state elections, in the forthcoming weeks. What is going to be the net result, specifically in big states like, Rajasthan and Madhya Pradesh, which are going to happen on the 25th and the 30th of this month. And election results will be out by the first week of December. So I think markets are slightly jittery now. The earnings season is almost complete. And I think markets are still worried that inflation is still elevated, despite the fact that there have been some bright spots in the market, like crude prices have softened. So I think net there was hardly any follow-up buying today, very low volumes because of the festive season. And my guess is that markets would resume their buying or resume their journey only from Wednesday onwards. Tomorrow also is a market holiday. So I think clearly all these factors contributed to a very lackluster session today. And I think we could get some cues only from Wednesday onwards.
So Wednesday, what is your expectation, Avinash? Are we going to see some sort of action? Because I think in terms of news triggers, which Monday could not factor in, one being the CPI inflation data of Monday evening, and then the WPI inflation data for Tuesday. But this is something that, according to you, has the market already factored in some expectations for trade on Monday, and hence Wednesday. Do we see any sort of a knee-jerk reaction to the numbers which are going to come out after market closure on Monday and then on Tuesday?
No, I think inflation numbers, Karthik, have been largely factored into by the markets. I think what the market is looking at is that in these five state election states, hopefully the BJP, the ruling government, backs all these states. If there is any negative surprise, specifically in states like Rajasthan and Madhya Pradesh, then I think that could give a big jerk to the market. And I think till that time, the markets are going to be in a very volatile zone. You could see a lot of stock specific activity because within the small cap, mid cap, category of stocks, there are many companies which have come out with very good numbers, very good business commentaries. So I think it's going to be a stock specific kind of market for some time. Macros definitely would be important, but I think the clear signal for the market would now be the election verdict, which is now just about 2 weeks away. And I think that would be the real near-term trigger for the markets to rally in the near term.
So many analysts, Avinash, also believe that this is the market really where it's difficult to understand whether the market is actually valued correctly or is there a little bit of overheating in the markets. A lot of analysts we speak to say that this is the market to buy on dips. Do you concur? Is it a market to buy on dips, or should you still go stock specific? Should you still go as per fundamentals of companies, hold on to the assets you have and not worry too much about the fluctuation?
No, I think buy on decline is definitely a good strategy. But I think if you look at key sectors like automotive, specifically the commercial vehicle space, if you look at real estate, capital goods, cement, infrastructure, I think these are pockets of opportunity where if the market corrects, I think investors should use this opportunity to accumulate, good quality stocks here, both from the large cap and the mid cap basket. My sense is that earnings recovery, which has started in the first half, is going to gather momentum in the second half also. And of course, there would be a little bit of uncertainty for the state elections and then going forward, for the general elections next year. But net, I think markets are in a sweet spot. At least I would believe that there would be no major panic sell off. But yes, whenever the market corrects, I think investors should use this opportunity to buy on declines. I think category wise, sectors are very important. Wherever we feel that double-digit growth in earnings is expected over the next, say, 2 to 3 quarters, I would believe that one should definitely deploy some funds here and definitely nimble in the market despite the fact that the index may underperform.
Okay, so the index may underperform and yet buy on dip seems to be the strategy coming in. And of course, the big election season that everybody is waiting to see the results of underway. So I think we'll get a lot of clarity maybe in the first week of December when state election results are out. And thereafter, of course, the entire election rally and the market rally or not, we'll have to see as a run up to the general elections ensues. But let's stick to market action on Monday. And before we move on to the Protean IPO, I think let's quickly look at the gainers and losers as they were on the trading session on Monday. Avinash, let's start with the gainers first. Coal India, Eicher Motors, Hindalco, M&M, BPCL. No real pattern that emerges from the gainers. Is this again stock specific action? Because we've seen Coal India rise about 5.29%, 5.3% almost, and Hindalco almost in the same industry up about a percentage. And if you look at the auto sector, you've just got action on Eicher Motors and M&M, both upwards of around the range of 1% to 1.85%. What has triggered really this momentum in the stocks that have gained today?
No, I think Coal India presented a pretty decent set of numbers. In fact, 12-13% growth in profit, plus with a very strong throughput in the volume output. I think the markets were quite happy that after a very long time, the profit trajectory for Coal India has, improved significantly. Eicher Motors also posted a decent set of numbers. I think markets were also happy that despite a rise in commodity prices, they were able to hike prices across product categories. And I think volume growth was also pretty solid. I think in case of M&M and BPCL has risen largely because crude prices have turned extremely soft, and I think that definitely means that GRMs could be well protected here. Obviously, M&M has also shown a very strong throughput on the volume side. So my guess is markets are reacting to these numbers, and I think that is probably the reason why we saw a jump of almost 5% in Coal India, around 2% in Eicher Motors. So I think it's going to be data driven and fact sheet driven. So I think my sense is the markets is clearly respecting good numbers. Poor numbers have been definitely been ignored by the markets, and I think it's always a buy on decline for these stocks. So I think clearly you'd see a little bit of action in these stocks going forward also.
Okay, more action expected on the gainers that we are seeing on the screen today, but let's also move on to the losers and let's see which are the stocks that did not really live up to expectations today. SBI Life Insurance, Bajaj Finance, Infosys, a stock that we saw rally 1.4% in the 1 hour of Murat trading, sees a massive correction on Monday's trade. And then, of course, there's Apollo Hospitals and Tech Mahindra. Any particular pattern that you see, or again, these were good quality stocks to buy perhaps during the Murat season, Avinash? And then, of course, profit on the very next day on Monday's trade and cash out. What do you see as the sentiment here?
No, I think clearly in case of Infosys, Karthik, as well as Tech Mahindra, I think it was clearly a Murat sentimental buy. And I think today market actually ensured that there was a lot of profit booking in these counters because fundamentally, the IT sector is going through a big challenge. I think there are significant headwinds. We have already seen numbers for Infosys where they have cut down the guidance. Tech Mahindra has come out also with a very disastrous set of Q2 numbers and where the commentary was very cautious. So I think, in IT, it was very obvious that this kind of rise was unsustainable. In case of Bajaj Finance and SBI Life, I think despite good numbers, my sense is that it seems a little bit of profit booking has taken place. Bajaj Finance has just concluded a large QIP at around 8,000 odd rupees, and I think they are very well capitalized. So I think these kind of dips in the market are quite natural. I think some profit booking was expected, and that came through in Bajaj Finance and SBI Life. But I think in case of Infosys and Tech Mahindra, I think the counters are fundamentally weak. So I think that's probably the reason we could see a sell-off here.
All right, and now let's move on to the big IPO, Avinash, should we? Let's talk about Protean E-gov IPO. Finally, the listing did happen on Monday and it commanded its listing price at the upper end of the band at about 792. In line with analyst expectations, and a share subscribed or a stock subscribed 23 times, oversubscribed 23 times or so. For those who did get allotted the IPO shares, Avinash, what should be the strategy from here? And for those who were not as lucky, what do you suggest when it comes to participating in this newly listed stock of Protean E-gov?
Yeah, I think my guess is Protean E-gov is a monopolistic business, Karthik. But I think you must also understand that in whichever segment they operate, like Aadhaar or typically UPI, I believe these segments are matured segments, and I think you're not going to see a huge kind of incremental growth what was seen in the last say 5 years. So my guess is I think growth will be steady. Somebody who's looking at the next 2 to 3 years as an investment horizon can even look at buying the stock from the market as of now. It offers a reasonably good risk reward opportunity. But in the very short term, I think one should not expect any major fireworks because I think this is a steady business, a very strong cash flow oriented business. But in terms of growth, my sense is that the next 2 to 3 quarters would at best be steady. I think one could not expect a multiplication of, a kind of gains on the stock. It would be a steady kind of long-term performer. So I would believe that somebody who wants to put a portfolio choice can definitely buy in at the current level. But short term, I won't be surprised the stock may remain a little stagnant for some time.
All right. So short term stagnation, but long term, of course, a well invested in stock is the word coming in from Avinash. Avinash, I want to run you through because it's a special day. Markets on Monday have closed. Tuesday is a holiday. I think let's give our viewers something to really mull over for the next trading session before it resumes on Wednesday. And this again is around the frenzy of the MamaEarth IPO, and thereby a company really trying to stand up to the big daddies of the FMCG space, including HUL. But numbers as we see it have been a little tepid when it comes to not just MamaEarth, not just Honasa, but the entire startup unicorns that have gone ahead and listed. So let's pull up some of that data for you, Avinash. Should we? A little bit of research that we've done on market capitalization versus pre-IPO valuation of companies. And the pattern that emerges is that in more cases than not, the pre-IPO valuation of these unicorn startups seems to be ahead of what the market has corrected it to. So let's look at that data. To begin with, let's look at PayTM. PayTM pre-IPO valued at about $16 billion and market cap as of today stands at just about $6.78 billion. Zomato being an outlier which has now become a multi-bagger had a valuation of about 5.4 billion and has gone up about 2.5 times since its IPO. But look at the case, even Nykaa being an exception, valuation more than doubling. But add to that, the despair coming from companies like Policy Bazaar, where valuation has tanked from 6 billion to a market correction of about 4.04, just about 4 billion or so. And MamaEarth Honasa, valued last year at 3 billion, and the market's telling it that your real value is actually not 3 billion but 1.2 billion or so. What do you make of this data, Avinash? Do you think markets have given unicorns a reality check and inflated valuation pre-IPO, where profitability is not a question, but only growth at all cost is? Do you think it is some sort of a realization, some sort of a correction that just going after customer acquisition is not enough and your numbers need to shore up even when it comes to revenue and profitability?
Yeah, I think, Karthik, you mentioned right that most of these, unicorns. Yeah, I can hear you.
Go ahead, please.
Yeah. So basically, Karthik, all these unicorns like PayTM, Zomato, Policy Bazaar, or Honasa, which got listed recently, I think the key element was the valuation of these companies. I think it was purely based on the footfalls or the eyeballs without focus on the cash flow generated by these businesses. I think today there has been a very growing realization in the markets for most of these fintech companies that they have to be cash positive, they have to make EBITDA positive operations. And most importantly, if you hear the commentary from PayTM or Zomato, I think they have clearly understood that the market wants them to be profitable, at least at the operating level. I think PayTM has already said that by September next year, they will be EBITDA positive. Zomato has been doing exceedingly well, and that's why the market has re-rated this stock. And plus, within its space, there is hardly any competition except for Swiggy and Zomato. There are only two food delivery players, which clearly shows that this place is clearly monopolized by Zomato and Swiggy. So to that extent, the market has been liking Zomato. But now coming to Honasa, my sense is that this is a company which does not manufacture any products. It outsources almost everything which it manufactures, or spends almost 40% of its revenue on advertising. And the biggest negative for this company has been that it has been unable to retain its customers. It's been able to attract new customers, but
Yeah.
something which the market likes is retention of customers, which has not happened till now. And valuations still seem to be pretty aggressive. I think we will have to see the next couple of quarters how Honasa delivers on the numbers, because if the numbers are tepid, if the numbers don't deliver as per the market expectations, then I think already we saw the stock coming down to a low of 277. It has again bounced back to around 315 odd levels. My sense is the market should look at the earnings growth trajectory and the operating margin trajectory, which I think is going to be take a long time for Honasa. So I think it's better to keep away from some companies where the visibility of revenue, where the visibility of profits and the visibility of earnings growth is still a long time away. So I think within this pack, I think I would be more positive on Zomato, where I think visibility is strong, the ownership pattern is very strong, and where the monopolistic position of the company can obviously propel it to grow much faster than the market.
Okay, so let's talk about Honasa, and in fact, let's pull up those graphics again of the pre-IPO valuation and the post-IPO market capitalization. Avinash, I want to understand from you, when you look at these brands as an analyst or as a student of the securities markets, how do you define the sectors that they operate in? You mentioned Honasa does not manufacture its own products. Is it fair to call it even an FMCG company? Or would you rather call it a marketing company? Similarly, if you look at the rest of them, Zomato, being in the food business, may not really be classified as a food company, but as a tech company. Policy Bazaar does not have its own insurance product. So is it again a tech company or is it an insurance company? So if you were to look at this entire list, what are the industry classifications that you would really give it? And hence, perhaps its valuation should be compared with that sector and not perhaps the sector of the products that it markets or sells.
So I think rightly pointed out, Karthik, all these companies are basically facilitators. If you talk about Zomato, PayTM, or typically even a Policy Bazaar, which does not manufacture anything, they are actually facilitators for converting into the product into revenue. In case of Honasa, I think very clearly they are largely a domestic marketing kind of company where they outsource the entire product and only the marketing and the branding is done by the company. Now, what is important is that clearly in terms of customer retention, I think that is something which the markets are not very comfortable. Even during the public issue time, this point was raised by a number of analysts that retention is very important. If you start building a business model where you spend almost 40% of your revenue on advertising, and that only helps you to increase your new customer base, but does not help you to retain your existing customer base, that is definitely something which is negative. So I think all said and done, whenever such kind of IPOs do come in, Karthik, the only simple way to look at them is to compare it with the products. But I think you're right in saying that they fall into a facilitator kind of category, and therefore valuations have to be seen in that light. Today, Honasa has managed to, get its issue oversubscribed by almost 11 times. But in terms of the risk reward and in terms of the wealth creating opportunity, it's going to take a long time. Markets are going to be sanguine about their earnings growth, the visibility of top line, the profitability. And I think to that extent, data centric, approach is very important. If the data is not going to come in very strongly, especially for the EBITDA and for the cash flow generation, then I think it's going to be an extremely difficult journey for a company like Honasa. So I think it's better to be a little watchful here rather than making a short term immediate call based on purely the price momentum.
All right, don't make a call based on the price momentum. Watch out for these companies is the word coming in from Avinash Gorakshakar. Avinash, always a pleasure having you here with us. Thank you so much for joining us on this episode, and we hope to keep having you back with us to make sense of this very, very complex animal called the stock markets and make it simple for our viewers as you always do. Thank you so much for joining us, Avinash. Well, with that, it's a wrap on Last Take. We'll be back with Business Plus in just a short bit. Don't go anywhere.